What's going on, everyone? I hope everyone's well. I'm really excited to present today my highest conviction stocks. Now, I started a more or less obviously separate account other than this one, but I started a $1,000 I guess YouTube account very recently here on screen, and I started buy orders on this I started buy orders on this puppy here in April 22nd. So yeah, we're just gonna take a look at this portfolio. Because I want to make this the YouTube account, I wanted to make this stocks that I'm especially bullish on, I have especially good research on. These are very much so my highest conviction stocks. Now, as you can look at the names here, none of these stocks are going to be really like this, like, oh my god, 100x, oh my god, you know. They're more or less all companies, all above 5 billion or so market cap. Like, more or less, they're recognizable tickers. Some of them are kind of more like mega caps, things of that nature. So yeah, and just kind of the reason for that more or less is if I'm recommending someone a stock, I kind of like knowing that I'm recommending them something that's a little moated in, not something that's a little risky. Like the 5 billion under market cap stuff tends to be risky because mega caps can take those businesses and gobble them up in their business model quite quickly, just kind of because of access to resources, things of that nature. So yeah, looking at the portfolio here, I'm pretty happy with the result. It says that we are 3% down, but that's not true. As I said, this is a $1,000 account. And the reason why it says I'm 3% down actually is because I've obtained a decent amount of dividends in that time. Alright, so this is kind of like an expanded look at the portfolio. As you can see here, the current value is $994. That's starkly close to the $1,000 starting cost. So my theory on why it says I'm 3.5% down is because I've obtained a good amount of dividends along the way so far, even though I've only had this portfolio less than 3 months. I'm going to go through why it says I'm 3% down when in actuality I'm more or less break even. And I just want to reiterate that these are high researched, high conviction stocks, but these are also stocks that I think will have tremendous compounding performance going through maybe 2030 onwards. That's how bullish I am on these stocks. These are stocks that I could see myself holding for a decade or more. Truly, Now I figured, why don't I just go into the stocks each one by one and just kind of give you all a little gestalt analysis of why it's in my portfolio. So Amazon's an interesting one because at a glance, I think most value investors see the 55 PE ratio and they go, oh my goodness, Amazon. It's one of the most overvalued big techs, yada, yada, yada. I don't know if you've heard that argument, but it's you know, it's worth addressing. Why does this thing have a 55 PE ratio? What's going on with that? Now, you have to understand, when you purchase Amazon, you're purchasing a variety of businesses that Amazon owns. You're not just buying like the Amazon.com e-commerce trademark. Now, some of those things would include Whole Foods Markets. They would also include, the most notably, AWS, Amazon Warehouse Services. That is a cloud platform. Now, that cloud platform powers a lot of different business functions in the world, and it is one of the fastest growing cloud platforms, and is also the most dominant cloud platform in the world. With that being said, it has reported 40% compounded growth over the last handful of years, including even recently, even in this economy. Yes, even in this economy, AWS has produced 40% compounded growth. This is the iShares Expanded Tech and Software Sector ETF. Now, this thing has a price to earnings ratio reported of 44. Something that you have to note about ETFs like this is that they might not always report their unprofitable companies' ETFs. So just in the Expand Tech and Software ETF, the price to earnings kind of run hot anyway. And when we look at the holdings here, we can see here with like Microsoft, Salesforce, Adobe, ServiceNow, like a lot of the Palo Alto Networks, like a lot of these companies revolve their business model within the cloud anyway. So I'm just reporting to you that the cloud tends to run hot valuations anyway. So that's the explanation for why Amazon may appear to be overvalued by some. Another thing you have to consider is that Amazon is continually reinvesting into its business. That's been the Jeff Bezos way for decades now. Now, because they're continually reinvesting into their business, essentially those earnings don't provide fruit right away on every single earnings report, if that makes sense. They're reinvesting, they're reinvesting, they're reinvesting. That won't produce fruit right away. However, it will produce fruit in the long run if you believe that those investments Amazon making will pay off. And they have paid off in the past. Amazon, as you can see here, has been one of the top performing stocks of all time. My parents, I believe, got into Amazon around here at some point in this few windowed area. And because of that, it's essentially been, that's definitely just provided a tremendous amount of opportunity for my parents, my family, etc. Because of that wealth creation that Amazon stock has done. That's an incredible amount of upside there. And that's just an argument for why you would want to own stocks, is something like the S&P 500 index wouldn't able to do anything like that. It would give you wealth creation in a different, slower, more steady type of way. It couldn't give you that explosive growth opportunity. Now, I still believe Amazon stock has room to run, and that is largely because of AWS, but I also love how there's a huge moat with the e-commerce business, Whole Foods, all those other types of property they own. As you can see here, this is just going off of what I was saying about how cloud and cloud computing is going to be one of the best, fastest growing sectors to be for the next handful of years. This research company reports a CAGR of 17.43%. That's pretty notable. If I could get a 7.43% return, that's a pretty solid return. If I got that every single time, I'd be pretty content. So yeah, I hope that just helps explain the PE ratio of Amazon, because they're continually reinvesting into their business, and because they're in a high valuated market sector, tech sector anyway, they are going to run that hotter valuation, and that's just the unfortunate reality of the makeup of the situation. However, I still believe that this is a tremendous business to own, and although I'm a little upset I believe I'm a little Amazon heavy at the moment on my portfolio, I would not sell a share anytime soon, and if it did have to go lower, I would nibble on even buy more. Now, PayPal, number 2. PayPal is essentially a fintech giant. Again, another tech stock, kind of more in the fintech space, obviously. Tech giant, payment, fintech. PayPal is a fintech giant that's been beaten down way too much, in my opinion. And the thing about PayPal is they are such a well-run company. Essentially, the valuations come to the point where it's quite close to being in line with the S&P 500, but it's still, you're buying ownership into one of the most promising fintech companies, one of the most dominant fintech companies, one of the best arbiters of transmuting value from one person to another that you could buy. And people don't know a lot of different things about PayPal. They don't know about how nicely run the balance sheet is. They might not know about the things like they own Mercado Libre stock, so you get exposure to South America and things of that nature just through owning PayPal. But to me, it's just a highly undervalued asset, especially at these prices. And my plan is to continue to add into PayPal around these prices, certainly. Google is one I am incredibly bullish on. I believe Google is the best value big tech outside of Facebook. The thing is, though, I just love the makeup of Google so much more. Facebook is, I guess what I'm trying to say is, Google just seems like some of the best executors in the business. They seem to always hit their marks. They seem to always be willing to expand out to other things. Google also is a play on the cloud. People forget that Google Cloud has been a promising resource, and it's been growing quite fast. So, I'm thinking about things like ownership of YouTube, where I get ownership of the business that helps Mr. Beast produce his videos. Now, I as the business, I as YouTube, I don't pay anything for Mr. Beast to go out there and produce his videos. Mr. Beast does that all up in his own accord. I'm simply being the arbiter of him communicating his videos out to the world, and for that I get residual income every time Mr. Beast makes a video. So that's why I'm incredibly bullish on Google stock. I am incredibly bullish on Google stock. I actually have a plan of lump summing a large amount of cash into Google, around $2,000 a share. I believe there's incredible resistance for Google at those prices. As we can see here, this is the 5-year on Google. And it bounced right here already one time off of 2000 in late May. And going back here to March of 2021, there was a consolidation here around 2000. So that's why I'm incredibly bullish on the 2000 for a buying price. But I would love this company even lower. I'm just incredibly bullish on this company for the long term. Everything to do with, again, AI, cloud, the search engine, the moat that they have, YouTube, it's an incredible company. I would own it for the long term for certainly. Now Meta is the other one. Meta is the best value big tech technically, but then again, there's a lot of negative connotation around this metaverse plan around Mark Zuckerberg. The thing is though, I just kind of close my eyes. I think about peers around me still using things like Instagram, which they own. Peers around me still using WhatsApp. And the thing that is most at risk, I think, is Facebook Blue, which the older generation seems to fancy. But to be honest, with the younger generation being moded in with Instagram, I don't really see any immediate long-term downsides of this business or that this business would go anywhere. I believe it trades at a tremendous value. They have around 60 billion in cash, and that's a tremendous amount of their market cap, a tremendous chunk of their market cap right there, a huge percentage of their market cap. If you have 60 billion in cash, so yeah, I'm tremendously bullish on Meta. I do believe it should be around the $380 stock like today, and it should be a good doubling within a year or two if fundamentals play out. Now, Warner Brothers Discovery, this one's interesting. This has been a huge loser in my portfolio. It's just a whole bunch of selling pressures come into the stock. Now, I picked this up because of the huge amount of content that Warner Brothers Discovery has. Now, as you can see here, there's a huge bunch of different media companies here. But what we can tell is that Warner Brothers Discovery, when you combine the assets of the Warner Brothers, which AT&T used to own, and Discovery Networks, it's a whole bunch of different large media assets. And I definitely think that when you look at them side by side with some of the big boys, they definitely have enough IP to contend, as well as the value that this thing is trading at is absurdly crazy. But let's take a look at some of the, as you can see here, some things that Disney owns, NBC owns, or whatnot. But if we want to focus on Warner Bros. Discovery here, we're getting all ownership of CNN, HBO, Discovery Plus, all these Cartoon Networks, TBS, reality TV shows. Some of the most recognizable brands in TV cable networks. Big media. The Warner Brothers studio, I'm really excited for that, and the DC films that have been coming out, such as the new Batman film. I'm just really excited for ownership in all these different IPs and whatnot. I mean, it's just so timeless when you think about things like Harry Potter, and I mean, the list goes on. The Warner Brothers are just such media giants. All the different films that they put out throughout the years and whatnot, and truly, their content's still been good. It truly has, and HBO especially, all the different TV shows that have been out, such as Succession and whatnot. So I really do fancy this stock. Now, there is a large amount of debt on this company. I think that's what's driving the selling pressure down. You have these AT&T shareholders that are coming in who are like these dividend aristocrat type people. And they get this WBD company because, AT&T said we're going to lose the Warner Brothers to the Discovery company. They're going to merge with that. We get partial ownership in the new company. So, in the spinoff of the new company, a lot of those AT&T shareholders seem to be selling this. As you can see, the 1 month chart here is down about 20%. Now, the thing is, though, is at 35 market cap, I just believe that is far too cheap for this company. For all the different IP I pointed out to you and whatnot, at a 7 PE ratio, that is far too cheap for this company. I truly do believe that. There is a significant amount of debt on this company, but there's also an impressive amount of cash flow to this company. This company is still making great movies that are making tremendous amounts of cash flow. I guess the biggest risk would be if they just keep doing movie content. At what point is there wealth creation for the shareholder? At what point do you do a dividend? At what point do you do buyback? But, I, as a long-term shareholder, I just like to see the fundamentals of the business improve. And what that takes is more good movies that come out that people watch and people go, hey, I like that HBO show. Hey, that Warner Brothers movie was actually pretty good. So, as long as that's still coming in, I'm extremely bullish on this stock. $35 billion, I believe, is way too cheap for this company. Especially when you consider Disney, at a 66 price to earnings, has a $175 billion market cap. So, I believe there's long-term some arbitrage in this new company. This new company, you're just buying it at a time when everyone thinks it's sus. But it's not a sus company, it's just a new company. It needs to get its feet underneath its ground. It needs to get its feet underneath itself. Continuing on here, Dropbox. This just goes back to everything I was saying about the cloud. So Dropbox here, it's an infrastructure as a service company. It's very moody, very sticky revenues. My dad, for his business, I know that he actually pays a subscription to Dropbox just so they can do a little finicky work for him. Saves him a little time and sweat. As you can see here in 2018, this had a 208 price to earnings. The cloud and the cloud markets have always been highly touted, highly touted. However, the thing I've noticed about Dropbox is that its price earnings come down way too low, and the cash flows of the business are way too strong. And it's come to an inflection point where, hold on, wait a minute, the rest of the cloud business seems to run so hotly on valuations. And everything about Dropbox is fundamentally very sound. The cash flows are very strong. The price to earnings seems to be compressing for whatever reason. Now that's why I'm so bullish on Dropbox. In the long term, I believe this should easily be a $30 stock and well beyond. Applied Materials. So Applied Materials is a really interesting one. So Applied Materials, you got an 11.5 price to earnings on a semiconductor company. But the thing I think is really interesting about Applied Materials is they make the materials of large semiconductor producers. So this purchase of this company is basically a pick and shovel play on the semiconductor industry as a whole, as well as you're getting a very fundamentally sound business with a small dividend trading at a value. The BlackRock Science and Technology Trust. Now this one's really interesting because this is a closed-ended fund from BlackRock. The thing that's really interesting about these closed-ended funds, they're just either kind of in a buy, or like you're able to buy territory or you're not able to buy territory. Now that's told by this right here. This is called the premium/discount. If this is at any positive number, that means it trades at a premium. And it's just not time to fiddle with closed-ended funds. Just go buy an ETF, go buy something that makes a little more sense, go buy a stock that you've researched, go buy VOO. But when this is a negative number, that means that there's a discount on some of the assets in this fund. And then it's at least realistic if you wanted to consider what this closed-ended fund has to offer. Now, I would certainly consider reading through this and understanding everything about this fund, but I'm going to try to give you the gist of it. This fund invests in some private sector, some public sector, but science and technology. And when I mean private sector, I mean that this has invested in some really interesting things that you may or may not have heard of. As you can see here, some really interesting things here. Patreon was one thing I noticed that they're invested in. They have about an $11-12 million investment in Patreon. Discord Inc., GitLab. Now as you can see, there's a tons of names here, but these are just some things I noticed that are really interesting that, again, like Patreon, I don't believe that's going to be a public company for another long while, but you can be invested in it early through vehicles such as this that are funds that do invest in private markets. Now, another thing that's really interesting about this fund is that this fund will also take covered calls, write it on its own securities, and use that premium and distribute it out to shareholders. Now, it's really interesting how it does this. I don't know how it does this. The managers at BlackRock just must be geniuses. But they're actually able to take long-term gains and distribute that to the shareholders every month. So every month you receive a long-term taxed gain of money. As you may or may not know, long-term gains are preferable to short-term gains, much less tax penalty on long-term gains. It doesn't even matter that I just bought BST 2 months ago. Both payments of dividend I've gotten from BST has been taxed at a long-term rate. This is also the reason why I have over $1,000 in my account, even though I invested only $1,000. And this is why Fidelity says I've lost more money than I actually have. I've only lost like $5. Even then, when you consider that I started buying on April 22nd, SPY went down 10% in that time. So basically, I'm break even on my money. And if someone lump summed into the S&P 500 index on that same day I started buying stock in my new account, they'd be down 10% and I'd be break even. I'd be doing so much better than them. Part of that is the reason why I averaged in, and I'm just buying good companies. I'm buying good companies that I believe are at a strong value. But that's why the BlackRock Science and Technology Trust is so amazing, because there's no asset quite like it. It's invests in such a peculiar thing and provides you such peculiar rewards. Dividend payments are so precious, especially in a market like this where Basically, if you're net long, you don't really win anyway. The only way you win is when you get that fat monthly dividend payment. Next company is Micron. Now, when you buy Micron, you are buying into random access memory oligopoly. So random access memory is memory chips, basically, and semiconductors and whatnot. Now, it's an oligopoly because Micron's the only US producer of these said chips. The only other producers are in the other hemisphere of the world, and they would be Samsung in South Korea and SK Hynix. That's why I'm so incredibly bullish on Micron. Ownership in an oligopoly trades at a tremendous value, such a necessary technology that will be in literally almost every single electronic going forward. More and more devices seem to require memory chips. It's quite incredible how much technology has been evolving. Now, the next position would be BlackRock. I actually probably will sell this one soon. I love the idea of ownership of BlackRock as a stock. I believe that BlackRock is just very powerful, very influential, very decent way to get exposure to financials, but I probably will get rid of this one here soon just because I believe BlackRock kind of does have room to fall more compared to all the rest of the stocks I own if the SPY would take another downturn. But I do believe that BlackRock will be a $1,000 stock in not too long from now. And I actually remember it was very close to around that price, not here recently, because I remember actually selling it around $900 at some point in 2021. But yeah, as I said, you know, I just kind of saw BlackRock around under $600. I picked up a little bit of shares and picked some up in my personal account too. But like I said, I actually have plans to get rid of this kind of soon and reopen that position should it fall around 450 range. The next position would be Nokia. Now, Nokia is really interesting because they used to be in the 90s and whatnot. They made cell phones, very hard, indestructible cell phone producer. Now, they are actually a 5G company now under new management with a new CEO, Pekka Lundmark. He's actually a legacy employee. Now, this new CEO, he's been really good about picking apart different pieces of the business that were inefficient. He's turned a lot of the earnings reports around. The projection of the business makes a lot more sense as a 5G player. They traded a tremendous value, especially when you compare them to. They traded a tremendous value, especially when you compare them to a direct competitor such as Ericsson. The thing that's really interesting about Nokia is the growth in 5G has been insane. I mean, take a look at this here. CAGR of 50% expected 2022 to 2030. I mean, this is one of the fastest growing industries in tech right now, is 5G. There seems to be 5G integration in every different types of technology as well. I don't know if there's something you know about 5G, but there needs to be a physical arbiter of 5G to provide 5G. That's why you hear these things about like 5G towers or whatever, because these towers need to go up a lot of different places because 5G needs to work very much as a physical location kind of thing. It's not so much broadcasted, it's more of like, oh, 5G arbiter is here, so I'm able to get my 5G signal, which gives me super duper fast speed because the 5G arbiter is here nearby. It's not so much like 4G, 3G, how those kind of were with those types of cell phone towers. It's been a little bit different. Now, that's kind of good for someone like Nokia because if people are trying to get this technology integrated everywhere, Nokia is going to be a huge beneficiary of that. The next one will be Citigroup. This is actually a position that Mr. Warren Buffett opened recently, and I opened Citigroup recently. And the reason why I own Citigroup today would be it's a financial company that pretty much I feel like I'm buying $1.50 for $1 here. I pretty much feel that it's one of the better values in the financial sector. I want a little financial exposure in the financial sector. I believe it's kind of unfairly beaten down at this price. And long term, I'm just very certain that it will be higher than what it is at now. Next positions are BioNTech and Moderna. Now, these positions I'm not going to cover so much because I've covered them in a number of different videos, and it's like, of course I have to have them in the YouTube portfolio. Who else would I be if I didn't have them in the YouTube portfolio? They're stocks I've talked about the most now. These are actually some of my best performers right now with 17.7% gain on BioNTech and almost a 30% gain on Moderna there, and it's really helping out my portfolio. And as I said, the SPY's gone down 10% in this time, but buying stocks like that are great companies have really helped keep things up in this time. Now, I am expecting things to go lower, and I do have cash on the sideline. I do plan to maybe infuse some cash into this $1,000 portfolio, maybe a couple $100 more, but I don't want to put too much more money into this. We'll have to see where this goes. I was thinking I want to let like a whole year kind of play out, and then maybe like next April I do add like, I don't know, like $10,000 into this portfolio. Just like a good chunk of money to show you guys that I am serious about, just having a transparent YouTube portfolio that people can follow along with, that people can see kind of like how I'm investing my money, and that people can understand that like investing is possible. It is possible to invest, get a decent return by just buying like good companies over a long period of time. So thank you guys so much. Yeah, as I said, a lot of these companies I could see myself holding into 2030 and longer. I hope I explained the long-term thesis of these companies quite well. These companies have a long runway for a lot of them, a long runway, and I'm super excited to be an owner of them. And I'm also really excited to see kind of like how the portfolio does now. It's really hard to outperform in the long period of time because decision making and yada yada and all that comes into play. But I feel like I'm just unconscious when I'm like buying stocks sometimes, because it's almost like all the research has already been done, so the actual like decision making, I feel like just kind of like the best thing to do is just take like all emotion out of it and just kind of like do it. And so far that seems to be working, and it's been really hard to buy when things are red, but I actually did majority of my buying here. I did a majority of my buying like when SPY was around 380. So here in April I start my portfolio, I'm holding pretty much all cash, and then when I saw like 380 on SPY, that's when I'm like, all right, I'll go ahead and start like heftily buying stocks up. And I think because I was able to wait, those are just one of the things where I, as like a conscientious being, am like, hey, let me like make a difference in my performance here. Let me just kind of like watch for certain things, and then let me buy like the good company that I've researched, and things along that nature. So yeah, I hope you enjoyed the video. I'm really excited to see where this portfolio goes. I do believe that SPY could fall a good amount more. I think around 340 is where I'm expecting SPY to bottom out. As you can see, there's historical resistance going back to like September of 2020s here, and that would be very, very close to like the top before March 2020 drop. So in that like short-lived kind of like recessionary environment. So I believe that the bottom will certainly be around here. However, I'm kind of put in a position, and I hope this portfolio shows you that it's like you can't be afraid to just like invest. And it's like, yeah, I still have my highest position is in cash. However, it's only a 14% position of cash. The other 86% of my portfolio is investments. And the reason why is because I don't know when those biggest days of the market are going to come. For all I know, we could have like 3% gain days in a row in the SPY. Next thing you know, stocks are 10% higher. No one wants to like deal with them. And then you have like a 1% gain day, another 1% gain day, and it's just like, what even happened? I don't even want to like buy these stocks anymore. Everything's so green. So just something to bear in mind, that I'm kind of playing this as aggressively but cautious, and I think those are kind of like the things that really make a good difference in a good long investment plan, if that makes sense. So those are definitely qualities you want to try to cultivate and build and whatnot. So yeah, again, this is my portfolio going forward. I'm gonna make little changes, little tweaks of it. I hope to update you guys with the video more or less on this public portfolio once every quarter or something like that. But I just want to put this out there. A lot of these tickers, a lot of these names I'm super excited about. So thank you guys so much for watching my video. Please take care, have a good one, have a great rest of your day. Do something that motivates you, do something that empowers you. Good luck on the rest of your endeavors. Be yourself. I don't know what I'm saying too much. Have a good day, everyone. I don't know what I'm saying too much. Have a good day, everyone. I don't know what I'm saying too much. Have a good day, everyone. I'm saying too much. Have a good day, everyone. Too much. Have a good day, everyone.